Welcome to TradeTheMBA.com. This is John. This report is for the 15th of September. Heading into big OpEx weekend on Friday here, option expiration, as well as lockup period now for a lot of the buyback setups of the company. So it limits a little bit of liquidity going into an OpEx that's one of the higher values in the trillions. It's going to be interesting to see how that plays out. Obviously, this was the Fed's recognition here that consumer prices not stopping anytime soon, that the Fed has no choice but to continue. Now, the debate becomes, how far will the Fed go? As we've talked about, the Fed is limited as to how far they can go because they just can't afford it. No one could afford, at least from the government standpoint, the amount of debt service that would be required if they continue to move towards a 5% rate or even marginally beyond 3.5. It's going to be difficult to see that being sustainable and the deficits that it would create. Not to mention, we know there's a recession headed. It's just a question of how deep it will be. And so, you had some people talking about 100 basis point move, so a 1 point increase. Not likely to happen because that would be just catastrophic for it, not just business, but the reality is that you can't even do that because it's not going to affect the problems that we're having with supply. I mean, you already recognize that the administration just announced they're going to go and fill back the petroleum reserve, with prices over $80 a barrel when it was, filled up originally at 20 some dollars a barrel. It's sort of, this is that kind of thinking that has led to exactly where we're at this particular stage now. From a reading standpoint, we have MBI magenta fading, not quite yet below yellow. So that's significant because move below yellow definitely would create a much broader short-term move, and the MBI white also fading off of that. Shorts even modest, barely over the zero line, and actually fading. So we're seeing a little bit of a short-term buyer bounce here, looking for discount on the dip. So we could see a little bit of back and forth. Again, that peg is close to that 4,000 number from the previous algo level. So it's just a matter of watching that. And you can see identical readings here from a NQ standpoint. They're a little bit stronger from short-term buyers on the steel DOC. So there's that. Shakeout, though, still negative. No surprise there. We've been seeing distribution for quite a while. The euro that was all set to recover and be fantastic because Russia's losing and miraculously they're going to have all the fuel they need for winter, and everyone thought that was great. Now they realize that was just happy talk, and the euro's back below subpar. The humor of these things is very hilarious. I kind of like it. The dissociation from reality. Speaking of which, gold. Another dissociation here because the market at least recognizes that a deflationary cycle is going to be in there as soon as the recession starts because gold obviously understands that a recession is coming. You just have to know how to tell that a recession is coming, and you can tell because the Fed is raising rates, and every time they do that, you get a recession. I just keep saying it until it sinks in, so that you're prepared for what will come from that. Oil back up at 88. So this is going to be a floor to oil that the Biden administration wants to buy back from the petroleum reserve in the 80s. And come post-election, that will be the driver of another round of inflationary cycle, which bizarre. Makes no sense whatsoever, but that's okay. They have determined that they want to end the combustion engine, and they're going for it. TLT took a slight rise, coming back up here. It still has more to go lower simply because the Fed is not going to soften, and they're not ahead of the curve. But in downturns and softness, people tend to want to buy treasuries, and that causes a little lift and a decrease in yield. From a Bitcoin standpoint, you can see how lousy that is. The crypto winter is not over, hasn't ended. Still below 22. And again, we've been in that range, 18 to 20. As long as the 18 holds, I think that it maintains pretty safe. But if you break the 18, I think the reality of that revisit to the 13,000 range is very likely at that point because it will just exacerbate it. But you sort of run out of the people that are speculating in it. They were kind of wiped out of the whole movement during the carnage. Even looking at Ethereum, you can see the same situation. I mean, it's had a little bit stronger in this because of its multi-use purpose, and it's still being actively split into a variety of different uses, but still with the base of Ethereum. Our crypto value there. From an ES standpoint, the 50K, we're still stuck down here. We were below that original 23%, which is now the 50% because of the dropping Morganacci lines. And so that falling 100% always wants to pull price up a little bit. But now that you're at that 50, it becomes critical here with the magenta at 53's got to hold up. This was what we were seeing from the daily right before the collapse. And I was warning, you don't get those readings very often, and they tend to be cataclysmic in their movement. The only way it maintains this is by staying sideways going across, which actually on the 5K chart here, we're going to point out a couple of those instances because we got some of that where we had, and it's a back and forth situation. You get red MBI leading and magenta trailing it, but you have the crossovers. Everything's in the right thing. Literally, I looked for the DOC at that point for my green to cross above. And even though it did, you can see it got choppy in between there, but still ended up making that rise. Did it again over here. And it repeats it. So it's one of those from a programming standpoint. Yes, we can capture buy angles early, but we also have plenty of examples of where those just fail. And I think a little bit further on in the day, this is a long day, so there was plenty of this situation. But again, here's another one. This one turned to be far more successful, simply because you had the red leading, crossover, green DOC with the orange dip, and rising shakeout in that. So you can capture that just a little at the 38% instead of having to wait for that complete move going there. But it's one of those that just cycles back and forth, and I think it just becomes a percentage game. I prefer to cover the short earlier on that just so that you don't take the chance of the ride, particularly if you're over the 23%. Under the 23%, I usually wait because, like in this case here, where you barely ticking right around it, red is leading magenta on the MBI readings. White was also an advance. You'd just gotten over the 23%, and then it just immediately faded right back underneath there, and you didn't have a green crossover. So that's one of those that I would be like, well, yeah, it's a little slow on the lead here, but that's exactly what happens. It faded and started again. This one, though, the magenta was leading. So you can capture that gold under the 23%, going right back up. And here was another one towards the end of the day. So originally red leading, boom, immediate pivot, and right back down to the 0%. You didn't even have white lead, but you did have the white lead prior to it, which that one did lead to a move to the zero. But then you have this situation here where magenta gets over, you're right at the 23%, but red stays slightly in advance, and so it doesn't flip until that magenta pivot back above white. That's when it turned green from a programming standpoint. So it's just a battle in between there, but my preference still is to take the short cover, unless you have the clear indication, because the buy momentum, you don't know when it's going to end. Like in this case, that move up, once that pivoted above the white, instead of it retracing back to zero, like we see in a bunch of other examples, like over here, it stayed all the way there until just recently. Here in post market, and that's even been choppy on a move because you had the full reset of steel below that negative 13.5, so that provides plenty of short-term buyer capability. So that's an interesting situation. It's worth looking. I'm going to put together just a program for that, just to examine what the percentages are and whether I should flip the program to go a little earlier. But you'd be surprised how many of those situations occur where we break down between that 23, 38%, go back to zero, make new lows. So anyway, that's the long and the short of it. You can look for me on the Skype chat. Trade well. We'll talk again later.